Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, is our guest today. Jeff, thanks for coming in.
Always a pleasure, mate.
Now, we're going to first take a look at crypto markets. Bitcoin is at 29,555. It's down 5.34%. Ethereum is at 1,756. It's down 6.5%. Now, looking across to regional stock markets, the SGX is down 0.22%. Now, across the region, we've got the KLSC, which is down 0.49%. Shanghai is up 0.41%. The ASX All Ordinaries is down 1.53%. The Nikkei is up 0.44%. The Hang Seng is down 0.11%. And rounding up the numbers, we've got the Kospi, which is down 1.32%. Now, Jeff, what's your view on how markets have performed in the first half of the day? Obviously, the standouts are the ASX and the Kospi.
Yeah, look, it's been a very mixed day. New York closed nearly flat or just slightly in the green as bond yields in the 5 to 30 year tenor rose above 3%, and that's sort of dollar strength and weight on equities. We've seen US futures head lower in Asia as well. Now we turn to the Kospi. South Korea was on holiday yesterday, so it's sort of playing catch up to the day that it missed yesterday, but also that Friday session, which was pretty torrid as well. So we can't read too much into the price action there today. Very mixed picture across the rest of Asia. Japanese markets are higher with a lower yen. So the yen suffered. It's fallen nearly, I think, 1.5% over the last 24 hours.
It's a 20-year low for the yen.
Correct, yes. And it's entirely being driven by the widening US-Japan interest rate differential. And we saw the Bank of Japan today also reiterate they have no intention of tightening policy. That weaker yen is better for Japanese exporters, obviously, in a simplistic manner, although their energy bills will rise as well. China is still riding this reopening trade that we saw yesterday, where Beijing restrictions were eased, and also a lot of investors are now picking that we've seen the worst in the tech clampdown in that space as well, and that sector has done quite well, especially the US listed Chinese stocks in the last 24 hours. Across the rest of Asia, though, I think the higher US yields and Brent crude at $120 a barrel is weighing on sentiment in regional Asian markets mostly. The big surprise today has been down in Australia. The RBA has just announced a 0.5% rate increase with quite a
that was much higher than we expected.
Got that completely wrong. I was 25 basis points like everybody else as well, and they are very dovish normally. So huge volt face. We saw Aussie rally 100 points, although looking at my screen now, it's come back. But of course, that will be a big negative for equities. And we've seen the All Ords and the ASX 200 fall by about 1.5%. So I think it'll be a tough week now for Australian markets, because it looks like the RBA has finally climbed off the inflation fence, and we're going to see more tightening ahead.
Now, Jeff, what are some key things that you want to highlight from your commentary this morning?
Well, I think the main one was US yields. Now, I know I bat on about this like a broken record, but above 3% is fairly significant. Now, the fallout in other markets wasn't too strong. We have $96 billion worth of US bond auctions this week, and I suspect that the market's gone and sold ahead of that because they'll be bidding in those auctions. But if those yields are still there at 3% come Friday ahead of US inflation numbers, and those inflation numbers come in higher than expected, above, say, 8.5%, we could be in for a pretty torrid end of the week for equity markets. And I would expect to see the US dollar rally quite violently as well. So that's the real theme that I'm highlighting. Otherwise, data-wise, it's pretty quiet across the world today. That's going to leave us very headline and sentiment flow driven.
We've also got some key decisions out this week and next week from a central bank perspective. Could you give us some insights into what we should be watching out for.
Yeah, look, we've got the Reserve Bank of India tomorrow. They also climbed off the inflation fence and started hiking in an unscheduled manner previously. So I'm looking for another 40 basis points from them tomorrow. That may give some peripheral strength to the Indian rupee, but actually weigh on equity markets there. And I'm expecting the tone of the RBI statement to actually be quite hawkish. We've got the Bank of Canada, who will probably go 0.5% this week. We've got the ECB on Thursday, who will probably signal an end of quantitative easing after 15 years, and some rate hikes July and August. Of course, then we have the FOMC next week, of course, the one ring to rule them all. So, yep, really busy schedule of central banks. And I think the general theme here will be that they are all moving to a tightening mode to try and get on top of this inflation surge.
Now, Jeff, as always, thank you very much for taking your time to be on the show.
Always a pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thanks again for tuning in.